Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Welcome back to the podcast. Today, our guest is Ron Saharyan, and he's the founder and CEO of Profit First. Ron, welcome.
Hey, Gary, thanks for having me on.
So, Ron, tell me, what got you into the finance field?
Happens chance, actually. I was always kind of good with managing my money as a kid. I followed grandmother's envelope budgeting methodology. Okay. And my brother did as well. But it stuck for me. It didn't stick for my brother. So I've always been that kid that would have good summer jobs or weekend jobs, whatever. And I always had money because I always, paid myself first, right? For savings or for whatever toy or thing I wanted. And so that carried on with me through high school as well as college. And I used to teach some of my lacrosse teammates, this personal financial responsibility. But it wasn't until I started Profit First that I realized that business owners needed, a really significant way to understand how to manage their cash flow. And so I partnered with Mike, and 7 years ago, just really got into it and started helping business owners kind of do what I've done and learn to implement a pay yourself first methodology in any business.
Right. So, again, you talk about kind of, pay yourself first, but, profit first. So can you kind of go into a little bit about, what Profit First is about? But yes, we understand that it's a kind of a cash flow model, but kind of a little bit more into it.
Sure, absolutely. So most business owners that are listening to this understand the need for systems. They have systems to deliver their products. They have hiring systems, marketing systems, firing systems, all sorts of systems that we know we need to build a business. Yet nobody has a cash flow system. We have forecasts, which are great until you get punched in the nose, right? Like Mike Tyson, everything falls away. And we have financials that told us, what we did. Well, that we know what we did. That's looking in the rearview mirror. But what they don't have is a system on how to allocate their money in real time, how to purposefully allocate money so that they can pay themselves first if they're not paying themselves, how to allocate money for Uncle Sam, regardless of what their liabilities are. 3, okay, how do we pay down debt if they have debt? 4, profit. With profit, a business owner can pay down debt. They could celebrate the health of the company, or they can hire. And so really creating and understanding the importance of a system, and that's what Profit First is. It's actually a book and a methodology. It's not accounting. It is not bookkeeping. It is a system on how you manage your money in a business.
So it sounds like a lot of it, instead of, because typically, in the business, I always have people that I'm going to say robbing Peter to pay Paul. So it's like, oh, here's my profit. Now I got to come up with the taxes, the cash to pay the taxes. So then that's taken out of the current year stuff. And then, I got to do the same thing next year, and I'm just kind of behind the 8 ball, so this really changes that for me.
Oh, absolutely. And here's the thing, Gary, you're a CPA, congratulations, business owner, you had a profit. Here's what you have to pay, right? And then they fall off their seats, right? And they don't want to pay profit. No one wants to pay taxes. I'm sorry. No one wants to pay taxes. And so, what's happening is we're doing everything we can to prevent paying taxes, which I get, versus having a mechanism where it doesn't matter how much you pay in taxes, your company has enough money to pay it. And so what we're doing is we're getting back to basics. Okay. And much like grandmother's envelope budgeting methodology, where grandmother went to the store, whenever grandmother got $1, she put a quarter in the food envelope. She put a quarter in the rent envelope. She put a quarter in the clothes envelope, and she put a quarter in the church envelope. When she went to the food store, she didn't bring all those envelopes. She just brought one.
Right.
Okay. Because there's something out there that's called Parkinson's Law. Grandma made that quarter last. Instead of buying filet, maybe she got London broil. Instead of buying branded, she got generic. Okay. If she went there with all that money in her one envelope, chances are she would spend it. Parkinson's Law, also echoed by Stephen Hawkins, basically theorized that we humans are going to utilize all of the available resources in any given amount of time. Okay. What that means is if I give you, Gary, $10,000 to develop a website in 8 weeks, you're probably going to take 8 weeks and it's going to cost me $10,000.
Right.
I give that same project to somebody else and say $100,000 in 8 weeks. They're going to spend $100,000 in 8 weeks. Right. That's why you hear the term, people have money jumping out of their pockets is burning a hole in their pockets.
Right.
And so what happens is we want to, from a behavioral perspective, carve out that money. We want to go to the company with multiple different envelopes for important things so that we utilize these envelopes with a purpose. And so for the opposite side of Parkinson's is when resources are less, when resources aren't plentiful, we're going to do more. We're going to be more creative. We're going to be more strategic. We're going to try to get more out of less. And every single one of your listeners who hears this has experienced Parkinson's. Okay.
Right.
The example, a tube of toothpaste. When we get that first tube of toothpaste, some falls off. No big deal. We'll put some more on. But as that month progresses, we're cranking it over the corner. We might even buy a tool to squeeze it up. People even cut it. Okay. That's doing more with less. Think about operating your business under these types of constraints. And so Mike and I have studied thousands of businesses and really took a look at what is the healthiest of healthiest business look like through a couple different perspectives. One, what percentage of the revenue is going to the owner's benefit? What percentage of revenue, is earmarked for tax? What percentage revenue should be profitable? What percentage of revenue should be going towards operating expenses? Okay. And so in essence, what we're doing now is we're setting up envelopes, but we're using bank accounts. The
Right.
first bank account is an income account. It's a holding account. The next bank account is an owner's pay account. Then we have a profit account. Then we have a tax account. Then we have the operating account. And what we do is anytime we get a deposit, for argument's sake, we take that percentage right off the top and allocate that into one of the percentages. Okay. So quick math, just say you got $100. Okay. Well, let's start small. Okay. Let's put $1 in the owner's pay account. Okay. It all goes into the income account,
Right.
$1 into the owner's pay, $1 into profit, $1 into tax, and you run the business off of 96 other dollars. In essence, that's what we're saying to do. Okay. Now, the goal when we want to look at things is how do we get 60%, 40%, 50% of that revenue into the owner's benefit?
Right.
That's really where the magic comes along. And it's not as easy as it says, but basically it's a cash flow system that works with human behaviors.
Yeah, because it sounds like, especially when you say, okay, well, I'm only putting $1 in my owner's envelope, most people are going to say, yeah, okay, I can't do that. How long when somebody kind of starts down this road, with you guys in the profit first, okay, they say they want to do this to actually being able to implement this. What's the time frame?
So the implementation of it is pretty easy. It's getting off your butt and going down to the bank and opening up the bank accounts. Okay. And there's a lot of banks out there. We have lists of banks out there that are, free or have low minimum deposits out there. The next thing is actually doing it. Okay. Really figuring out how to do it. But it's not a get rich quick scheme at all. It actually takes years to really get good. A lot of these businesses where 85, 90% of the money is in the OpEx and the business owner is paying them sporadically, they don't have a profit, they don't even, it's going to take a while. I'll say probably about 18 to 24 months really to get a company straight and running so they have their profit first muscle memory up and going.
Right, right. And I mean, and I'm going to say for something like this to totally change, your mindset on how you're doing cash flow, 18 to 24 months really is not that long,
No,
in going through it.
well, here's the thing. If you're happy the way your business is running right now, great, stick with it. Right? If it's not, if you're looking to pay yourself more, if you're looking to have more clarity on what your cash flow is, if you're looking to really understand, the importance of your financials, if you're really looking to really create a well-oiled machine, okay, well then, we can't just take 20% out of the OpEx and throw it into profit or owner's pay. It's like taking a frozen mug in the microwave, you'll shatter it. So, there's different ways to approach different types of companies out there on how to do it.
Yeah. So, I mean, obviously, talking about mistakes that you see that business owners make, obviously cash flow is one of the biggest ones. What are some other, common mistakes that you see as you guys are bringing companies on to help them?
Sure. Most businesses do what we call bank balance accounting. They wake up every morning, they look at their bank account and see how much money they have. Okay. I don't know how often you look at your bank account, but I look at my bank account quite often just to see. And a lot of our listeners probably do, whether it's daily, weekly, monthly. Okay. And we make our business decisions based upon that. That's the error, is by making your business decisions based upon your bank account, because within that bank account, okay, you have to pay tax out of there. You have to have profit out of there. You have to have inventory replenishments there. You have to have so much stuff coming out of there. And so what we're doing is giving ourselves a false sense of security that actually all that money in there we can use to run the business. What I'm saying is, let's carve out the things that are important to us, like paying yourself, money for Uncle Sam, and a profit. Okay. And then you look at your bank account, right? And you look at the OpEx, you can still make those business decisions because you've already taken care of some of the essentials you need in order to run a business.
And I think, using this methodology that you're talking about, the good thing is that, probably if you're watching everything like you're talking about, when it comes time to pay the taxes, you have more than enough cash sitting there in that account to pay the taxes. And then you're not worrying about robbing Peter to pay Paul anymore.
Exactly. That's my favorite account. That is a purely behavioral account. No one likes paying taxes, but I look at it as not a badge of honor, but a way to say, you know what, government, I get this game that you're playing here. So what we look to do is start out with a 15%, okay, in the tax account, allocating 15% in there. And some of the listeners, oh, I can't do that. I know you can't, not yet. Okay. Right. Or, wow, 15% is going to be, I don't need all of that. Not yet. Okay. But it's a good starting point. That way we're on a percentage basis. Work with your CPA, work with, Gary, to figure out what would actually be the right percentage for you to start with. And the beauty of the percentage, it'll ebb and flow like your business. So, the last thing we want to do is take what we paid last year in taxes, divide by 4, and that's what our tax bill is going to be. That doesn't account for success or growth. Okay. Right. But by having a percentage, you could have a wonderful 2019. Okay. 2020, not so good. You have all of that liability that you have to pay. How are you going to pay that? You're not. Right. And so this is a mechanism to always ensure that you have money for Uncle Sam, regardless of what your liabilities are. And Gary, you're going to do everything you can to minimize liabilities.
Oh, right.
But I don't know many business owners making 500,000, $1 million, annually, not paying a boatload in taxes.
Right, right. No, I agree. I think that the great thing about that is that, again, as people go, you have the money available to do the different things that you're going to need. Because again, you talk about operating, you talk about, your owner's envelope and so forth, inventory. So, you have all of these different, I'm going to say, pay streams that are going to be there. And if you're doing it as a percentage, like you said, it doesn't make any difference which way you fluctuate. It's still a percentage, so it makes it a
Yeah.
little bit easier, to keep track of when you're looking at it that way.
Well, we're some of your audience may think that's not going to work in my business. We're a global S corp with 25 different bank accounts at 5 different banks. We've got lots of revenue streams coming and going, and the financial clarity that I have on, my real-time cash position is second to none. And so we've had well over 600,000 implementations across the globe. We're in 30 to 40 different countries doing this. Startups use it as their foundation to bust the doctrine of sacrifice. $100 million companies use it at a different level, that because they don't want to wait for their financials to come on in.
Right.
It's just really, it's a system. And what I've learned is that once you have a plan, okay, your profit first plan, how you're going to be doing this, the next thing is you feel relief that you have a plan. Then when you're actually moving money into those envelopes, you're empowered. It's often the first time that a business owner is empowered by moving money. After that comes focus on growing the business. Profit First was a startup in 2014. We started out with the percentages in the book and never looked back. And, all I had to do in those early days, just sell, get business. I know I had a system that I would be paying myself. I know I had a system that would cover my taxes when we're profitable. I know I had a way to be profitable. Now we're just focused on that. So if you're a business owner and, you're worrying about these things, there is a solution. And the profit first methodology is it.
Right. What's when companies are starting this up and they're starting to use profit first, what are the biggest challenges that you see them facing?
Often I see their accountant saying to them, you don't need all those accounts. All you have to do is look at your financials, analyze them, and correct them. You're going to pay so much money in bank fees. You're going to spend so much more money in bookkeeping services for reconciliation. All of it is not true. And so, here you're working with, a trusted advisor that you've been working with for a while. And then you pick up this book or you hear this podcast, you go to your CPA or who's unfamiliar with it. And you say, what about this? They don't know. It's not that they're just don't understand the system, because, a couple of years ago, Gary, if somebody were to say hey, I'm going to open up 15 different bank accounts, you might be like, whoa, wait a second.
Yeah, right.
Right. And then the other one is literally change. Even positive change is very difficult.
Yeah.
Right.
Yeah. I know. I mean, when I first read the book, I was kind of like, okay, same thing. Oh, this isn't going to work. And then did it again and read it again. And then it's just like, okay, so reading through this and everything else, it's like, to me, the biggest obstacle I see is myself.
Yeah,
that's get out of my own way.
Right. And that's great. That is so great. And, it literally means getting up, opening up some bank accounts, then it's doing it. But more importantly, having the support, having somebody to assist you when things get tough is even more, because you're going to get a curveball. Something's going to happen. You're going to be tempted, right? People try to do this on spreadsheets. They try to do it in accounting systems. Too much human error can involved in that. But what's going to happen is something bad or, unsettling happens in your business, and you're looking at your profit account and you see all this money in there, right? that you're going to be tempted to get it. Or, you're going to have to make tough decisions, almost come to Jesus conversations with yourself about, hey, Joe over there, he's not holding up his end of the bargain here, right? Joe's been with me for a long time, but he's not holding his weight, but I'm loyal to Joe. Okay. Well, then if you're loyal to Joe, he's not holding his weight. You're not being loyal to your family or the other employees that are actually holding their weight. Right. And so, we're going to have to divorce ourselves of a lot of things to make sound business decisions. And sometimes that is going to be a hang up versus an opportunity.
Yeah, I'm going to say that, lots of times with business owners, I'm going to say I see two extremes. One is the extreme where they, every extra penny they have, they take out of the business. And what they do with it is different. Then you have the other extreme that wants to keep everything in the business and they're not taking care of themselves.
Right. Which is crazy, because I even see some really good businesses that, they're healthy, they're profitable, yet they're not necessarily leveraging that business. Right. They're not maxing out their 401k. They don't have a SEP, IRA. They don't have safe harbor. They're not, properly insured. Their house doesn't have 3 to 6 months of core capital in it. Their business doesn't have 3 to 6 months of core capital in it. Their kids' 529 is not funded. But think about all of the great things you have at your fingertips if you have the money to invest in them, to strategize with them. My accountant, Keith, doesn't care how many bank accounts I have. All he cares is I'm pushing all my chips over to him. And that's where he's doing tax planning. That's where he's doing tax strategy. I mean, when you and I were talking the other week, Gary, I can't help people with tax strategy if they don't have any money.
Right.
There's nothing we can do.
Right.
This changes that.
And I think the other thing it does too is, people always talk about, oh, I'm plowing money back into my business and stuff like that. But this makes it to where now you have this account or this envelope that you can use to invest back in your business, if it's, technology or whatever. And I think sometimes people stop and they're afraid to spend that money because, again, they're doing the whole robbing Peter to pay Paul thing.
Yeah. And here's the thing. If we do this properly and, you're paying yourself, you have money in the OpEx and you want to go and buy something and you don't have the money in your OpEx, that's your company telling you can't do it.
Right.
Right. You either got to increase your margins, more sales, become more efficient. If it is in that OpEx, great. It's a no-brainer. Now, we have a tithing account. We have a marketing account. You can have a legal account. There's so many different ways that you can utilize this so that even if you are a larger business, you can say, okay, we have X amount of money for marketing. Here you go. Let's make sure we're getting a return on it and measuring it. When it's one account, how much do you really have for marketing? Right. So let's be smart about it. People might even call it budgeting, if you will.
Not that word.
Yeah, I know. But here's the thing. No one sticks to a budget. That's the problem.
Right.
If I tell people, they go, Ron, what's the budget? I say, if I give you a budget, you're going to spend more than the budget. So I like to say, give me choices. Give me 3 choices. Give me an expensive choice. Give me a cheap choice. Give me something in the middle. Then provide me with supporting evidence of which one you think is the best.
Right. I kind of go back and look at this, because I know I have many times clients come to me, hey, can I afford to do whatever?
Right.
And just like, and it's one of those things that yes, we try to help counsel them. It's like, no, I'm never going to, answer that question per se. But I like the idea that, hey, I have this operating account. And if I have the money in that operating account, then that means I can do it. But if I don't have that money in there, then no, I can't do it.
Well,
and I think that's something that's extremely important. And then also you talk about, having the 6 months of operating cash in there and things like that. which
It's a
is
vault.
always important. I mean, you look at what we've just gone through with the past 2 years of the pandemic.
Yeah.
You know, if you didn't have money on the sidelines, many businesses did not do well.
No, they didn't. Those that were operating the system fared well, much better across it. I mean, having a bunch of bank accounts with money in it, doesn't suck.
Right.
Like one of the questions that I get asked a lot is, how do I know when I can hire? Right. Well, people are always often saying, well, you should always be recruiting. When you find a great player, you can do it. But that's not reality. Okay. Most of us hire when there's an uptick in something or there's a downturn in something. Well, one of the things we suggest, we love to always be interviewing. Okay. But in order to hire, you need to have a system that'll allow you to have the funds to do it. And so you want to know if you're able to hire, well, then figure out what the monthly investment for a new employee would be. So let's just say, Gary, we're looking for an electrician. We know we're going to pay him $18 an hour. Okay, $18 an hour plus their burden, plus, all their overhead and everything like that. Let's do it times 160. Okay, whatever that comes out to be. We have a monthly investment. We take that monthly investment and we allocate that dollar amount into a new employee account. Okay.
Mhm.
Now, with that said, just say $5,000 into that new hire account. Are we able to still pay all our bills? Okay. So say for an example, we are. Okay. Awesome. Month 2, we allocate another 5,000. Okay. We're testing the elasticity of the cash flow. This time, maybe we're a little short. Well, let's take a look. Why are we short? Oh, because there's some funny months where sometimes billing is a little bit different. We get
Right.
more, there's an extra payroll or something going on in there. Okay, no problem. We identified we tested the 3rd month. Great, we were able to do it. I've just proven that if everything remains the same in the company, I can afford somebody at $5,000 a month. Now, the benefit of that is I've just prepaid the first 90 days of their employment. I'm not worried about how are they going to pay themselves or
Right.
for themselves. I'm up trying to get them up to speed and educating them because I have this money socked away and I've tested it. So, how do you know if you can hire? Test the elasticity of the cash flow.
Yeah. So, and that's an important point to make with all that is that's adding someone new, not replacing someone. Because
Right.
you already know if you're replacing, you already know you can because of you've had them in the operating account for a while now.
Yeah. Yep.
Yeah. So knowing what you know now,
Mhm.
go back to when you and Mike in the basement, came up with this. What would you have done different?
That's a great question. Slowed my roll.
Okay.
I was so excited about profit first, about sharing it, about pushing it, that I overwhelmed and I scared people away from it. Here's a guy going around saying Gap is crap. Okay. Saying that sales minus expenses equal profit is wrong. Right.
Right.
We're going to open up these 5 fundamental accounts. You're going to have 20% in owner's pay. You're going to have profit. You're going to do this. You're going to do that. People were running from the hills. So what the proper approach would have been more of, hey, let me slow my roll. Let me share with you a system. Okay. A system on how I pay myself, a system on how we do this, a system how we do that, and then look to drip it in an organization versus just starting with 5 of the accounts. We might just start with 1 account, Gary, and put 1% in it, right? If you haven't been paying yourself, okay. If you haven't been profitable, open up a profit account, put 1% in it. And the beauty of it, it works just like the 401k. Number 1 savings vehicle in America. Why? They take it off the top,
Right.
and you get penalized if you take it out early. I remember when those first came out, me and my wife said, no way are we putting 15% in. Let's put 3% in. We put 3% in. Then we did 5. Then eventually we're at the 15. In about 3 years, I said to my wife, can you believe that we're living with 60% of our top line salaries coming off the top and we don't feel a thing? It's
Right.
amazing. It's amazing how that works because you don't see it. You're not counting on it. It's there. Same thing with profit first, right? We're removing it from the top. We're putting it away. We're putting guardrails in place and we're using our behaviors to do bank balance accounting. And we're focused on that. So I would have started slower, smaller when I was sharing profit first.
Right, right. I think that concept that you just talked about just now, I think every kid that's coming out of college or coming out of high school, getting their first job really needs to think of it that way. It's like, okay, I'm going to, because you're not used to it anyway. So let me start now with whatever the percent is. And I always say that it's like, okay, you start off with that when you get that raise or increase or whatever. Hey, take 8% of that and put into it. And I don't care from a savings standpoint, if it's the 401k, if it's a Roth IRA, or if it's an after-tax brokerage account. It's a savings vehicle, however you decide to do that.
Yeah. And so when I'm interviewing business owners or talking to business owners, and I say to them, hey, listen, if your business afforded you more money, what would you do with that money? 95% of the time, they say, I wish I would have put more away for retirement.
Right.
Okay. So the first thing I'm going to do is open an account and a bank account, and I'm going to title it retirement. It's not a 401k. What it is an account that I can give that money to you, or I can give it to a financial advisor. I can give somebody to make that money work. So
Right.
we're going to start with that. Okay. Because that's really what's important. So if you're realizing that, man, I got to figure out how to put more money into the market or more into savings, well, that's the first thing you should open up and start allocating into there.
Right. I agree.
Yeah, my daughter does. My daughter's 11, and she has envelopes. And Mike, my business partner who wrote Profit First, just came out with My Money Bunnies, which is profit first for kids. We're getting it into the educational system. We're getting it into it's in universities right now. It's being taught at Pepperdine Masters. It's in Stanford bookstores, Carnegie Mellon, and we're really looking because small businesses are the backbone of America.
Oh yeah.
Right. When they can hire and they're paying themselves, people have jobs. When people have jobs, it relieves a lot of the stress from the home.
Yeah, that's for sure. And I think that the financial literacy of our society right now is probably at its lowest. And I think that, because lots of times we're not seeing this. I mean, I know back when I went to high school, we did have bookkeeping classes and things like that they were teaching us. And, there hasn't been, it seems like that's getting back into the school system a little bit, but I think it's important.
Yeah. Well, talk about investing. Compound interest is really a beautiful thing,
Right.
that it really is. So regardless of when you're starting, start. I was talking to somebody, put $25 away, put $50 away if you can. If there's any kids listening to me, put it away. Just put it away. Be more interested in saving it versus spending it.
Right. Totally agree.
Cool.
So our time is flown by here. What haven't I asked you, Ron, that you wish I had?
Do I have any special gifts for your audience?
There you go. Always like that.
I've got 10 books, Gary, for the first 10 people that hear this and respond to you. Hey, I'd love a copy of Profit First. All you got to do is send me their name and their address. How's that?
Oh, that's awesome. That's awesome. Yeah. So guys, you just heard that. So, the first 10 people that shoot me an email, text, or call my office and give me that information, we'll get you a copy of Profit First. And, I can tell you, I've read it and also have it on audiobook. So it's definitely, you get to hear Ron's partner, Mike, talk if you do the audiobooks. That's for sure.
He's great. And the one thing that, not being cute, but, when people ask me, what is the one thing that you would encourage people to do? I say, it's really easy. Do what you say you're going to do by when you say you're going to do it, and do it 1% to 3% better than expectations. You do that, you're going to be a rock star employee, rock star business owner, anything. Just do what you say you're going to do by when you say you're going to do it, and do it better than expectations. And simple.
That's great. So, Ron, if, the business owners or anybody else that's listening to this want to reach out to you, want to learn more about the program, how can they get in touch with you?
Sure. The best way, go to profitfirstprofessionals.com. On there, you'll find a lot of free resources. There's a lot of great things there. If you're interested in having your accountant learn more, there's an area there. But go to Profit First Professionals, check it out, or look at Amazon. Go to Amazon, Google Profit First, look at the over 1,000 reviews by business owners like you guys. Give it a shot.
Great. Hey, really appreciate your time and your thoughts on this.
You too. Thanks,
absolute
Gary. I
method.
appreciate it.
Yeah,
Awesome.
great. So this week, our guest was Ron Saharyan, who's the founder and CEO of Profit First. See you guys next week.